Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial mysteries that shape our world. Today we're diving into SB Financial Group Incorporated's latest quarterly report, and let me tell you, it reads like a financial thriller with plenty of plot twists and turns. This is their Q3 filing for 2025, and like any good detective, we are going to look beyond the surface to see what the numbers are truly telling us about this financial institution. We've got a lot to unpack, from their balance sheet to their income statements and all the juicy details in between. Before we jump in, if you love getting clear, nonsense insights from these dense financial documents, make sure you hit that subscribe button. We also have a great community over on Discord, linked in the description below, where we break down these reports even further. Let's kick things off by looking at the company's financial snapshot as of the 30th of September 2025. Their total assets have ballooned to a hefty $1.49 billion. That is a significant jump from December 2024, showing growth, but we need to see where all that growth is coming from. Now for the engine room, the income statement for the 3 months ending the 30th of September 2025. SB Financial Group Incorporated reported a net income of $4.0 million. This is a solid increase from last year's $2.4 million for the same period. Their basic earnings per common share went from $0.35 to $0.64. That is a considerable jump, suggesting improved profitability. For the 9 months ending the 30th of September 2025, the net income was $10.1 million. That is up from $7.8 million reported for the same period in 2024. This shows a consistent upward trend in earnings through the year, which is always a good sign. A big driver of this appears to be their net interest income, which is the difference between what they earn on loans and investments and what they pay out on deposits and borrowings. For the third quarter of 2025, it was $12.3 million, a nice bump up from last year's $10.2 million. Over the 9-month period, this figure was $35.7 million. Up from $29.0 million in 2024. This suggests they are managing their interest earning assets and interest bearing liabilities effectively. Now, no financial report is complete without a look at credit losses. For the third quarter, they had a provision for credit losses of $124,000. This is actually lower than the $200,000 provision in the same quarter last year. For the 9-month period, the provision was $1.1 million compared to just $200,000 last year. This increase in provision for the 9 months is largely due to a recent acquisition and growth-related provisions. Their non-interest income, which includes fees from various services, was $4.2 million for the quarter, slightly up from $4.1 million last year. For the 9 months, it was $13.4 million, up from $12.5 million. This area is showing steady performance. On the expense side, salaries and employee benefits rose to $6.2 million for the quarter, up from $6.1 million last year. For the 9 months, these costs were $19.0 million, an increase from $17.4 million. This is typical as companies grow and their workforce expands. Let us examine their cash flow. For the 9 months ending the 30th of September 2025, the company generated $15.8 million in cash from operating activities. This is a significant increase from $3.5 million in the same period of 2024. A big part of this comes from proceeds from the sale of loans, which went up quite a bit. However, their investing activities used up $5.0 million in cash this year, compared to $14.9 million last year. This is mainly due to the acquisition of Marblehead Bancorp. They paid $5.0 million for this acquisition, which is a key strategic move to expand their reach. In financing activities, they saw a strong increase in deposits, with transaction accounts up by $46.7 million for the 9 months. This shows customer confidence and a stable funding base. Speaking of acquisitions, in January 2025, SB Financial Group Incorporated acquired Marblehead Bancorp for a total of $5.0 million. This move was strategic, aiming to boost their deposit and loan base, and importantly, to acquire new customers in a new market area. They are expecting this merger to bring business synergies and economies of scale, aligning with their goal of expanding in Northwest Ohio and improving profitability. Now, let's look at their investment portfolio. As of the 30th of September 2025, their available for sale securities have a fair value of $193.2 million. That is a bit down from $201.6 million at the end of 2024. This includes a significant portion in mortgage-backed securities, which can be sensitive to interest rate changes. They also disclose securities with unrealized losses. At the 30th of September 2025, the total fair value of securities experiencing unrealized losses was $192.2 million, with losses totaling $29.6 million. Management believes these declines are temporary, which is a common sentiment in the market right now. However, it is worth keeping an eye on how these unrealized losses behave, especially in volatile market conditions. The heart of any bank's business is its loan portfolio. As of the 30th of September 2025, SB Financial Group Incorporated's total loans stood at $1.11 billion, an increase from $1.05 billion at the end of 2024. Their allowance for credit losses, which is like a rainy day fund for potential loan defaults, is $15.9 million, also up slightly from $15.1 million. Looking closer at their loan quality, the tables show a breakdown by year of origination. For example, in the commercial and industrial loan category, the majority of loans are classified as passes, meaning they are performing as expected. This is a positive indicator. When we look at fair value measurements, most of their assets fall into level 2, meaning their values are based on observable market inputs. However, their interest rate lock commitments, or IRLCs, are in level 3, meaning their values are based on unobservable inputs. This suggests a higher degree of estimation and potential uncertainty associated with these specific financial instruments. It is also interesting to see how they reward their employees. They have a stock incentive plan, and while they do not have any stock options outstanding currently, they do have restricted stock awards. The compensation cost for these awards is around $500,000 for the 9-month period spread over a couple of years, which is a common retention strategy for key executives. In the management's discussion section, they highlight their performance, noting a significant increase in net interest income driven by higher earning assets and yields. They also talk about managing interest rate risk, which is crucial in the banking sector. They also mention potential risks like economic conditions, regulatory changes, and cybersecurity threats, which are standard but important considerations. Now, for how well capitalized they are, as of the 30th of September 2025, their Tier 1 capital to average assets ratio was 10.08%, well above the 4.0% required to be considered well capitalized. Their total risk-based capital to risk-weighted assets ratio was 13.73%. Also comfortably above the 8.0% requirement. This strong capital position is a significant strength for SB Financial Group Incorporated, providing a buffer against economic downturns. So, what is the overall picture here for SB Financial Group Incorporated? On the positive side, they've shown solid growth in net income and net interest income, alongside a significant increase in deposits, indicating a healthy and growing customer base. The acquisition of Marblehead Bancorp seems like a smart strategic move to expand their market reach. Their strong capital ratios are also a major plus, showing financial resilience. However, we do see a notable increase in the provision for credit losses for the 9-month period, largely tied to this acquisition and growth. While management believes the unrealized losses in their securities portfolio are temporary, it is still an area to monitor closely, especially if interest rate volatility continues. Overall, SB Financial Group Incorporated appears to be on a solid upward trajectory, strategically expanding and managing its core banking operations effectively. The company is well capitalized, which provides a good safety net. Alright, that is our breakdown of SB Financial Group Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.